Clerk.
Government Business Notice Number 6, Export Finance and Insurance Corporation Amendment, Direct Lending and Other Measures Bill 2014.
Minister.
Acting Deputy Speaker, I present the Export Finance and Insurance Corporation Amendment, Direct Lending and Other Measures Bill 2014 and the explanatory memorandum.
Clerk.
First reading, a bill for an act to amend the Export Finance and Insurance Corporation Act 1991 and for related purposes.
Minister.
Thank you. I move that the bill be now read a second time.
Minister.
I'm delighted to be able to introduce this bill today because it's an important part of our package of red tape reduction on this repeal day, contributing to a reduction in business compliance costs, especially for small and medium-sized enterprises. The Export Finance and Insurance Corporation, or EFIC as it's known, plays an important role in maximising Australia's trade potential. It helps ensure that Australian small and medium-sized businesses have access to the finance that they need to grow their businesses overseas and in turn support our economy and jobs here in Australia. In recognition of EFIC's valuable role and to restore funds removed by the previous government, this coalition government has provided EFIC with a capital injection of $200 million in the 2014-15 budget. At the same time, we've renewed EFIC's focus on the provision of support to SMEs, which combined with the capital injection will provide the flexibility to ensure that EFIC's products and its operations can respond effectively and efficiently to the evolving needs of our economy. The Abbott government recognises the importance of finance as the oxygen of enterprise to small business and is refocusing EFIC to increase its capacity to finance small and medium-sized businesses seeking to capitalise on global trade opportunities. The vast majority of Australia's exporters are small and medium-sized enterprises, but traditionally they find it more difficult to secure export finance through banks, particularly when exporting to emerging markets. EFIC plays an important role in supplementing the provision of credit for exporters, and we are repositioning it to best support SME exporters into the future. EFIC, under its new CEO Andrew Hunter, is improving its own practices by simplifying its documentation and streamlining SME application processes. EFIC has also recruited additional staff to respond and support their SME work. Over the last 12 months, EFIC's focus on small business has been demonstrated by a growth in the SME team to 30 people, including 6 new hires in June 2014 in Brisbane, Melbourne and Perth, the simplification of core SME product and loan documentation and more efficient end-to-end loan processes. EFIC turned around a bond application for FFF Engineering in Western Australia this year in just 21 days, compared with similar transactions that in the past could take more than 200 days to process. These changes will help double EFIC's SME business over the next 4 years, and it's probable that the majority of these clients will be new to EFIC. Australian Bureau of Statistics shows that only 5% of Australian goods exported are capital goods. And yet, under the current EFIC Act, EFIC can lend directly in support of capital goods, but not all goods. This means that EFIC cannot lend for exports of many of the products in which Australia excels, like pharmaceuticals or consumer goods like food and wine. For example, this means EFIC can directly support the export of cows, but not milk. The government has therefore decided to enhance EFIC's capacity to support small and medium-sized businesses by allowing it to lend for the 95% of exports, thus improving the export potential of Australian small and medium-sized businesses. To implement this, the EFIC Amendment Bill is required to delete the word capital from the definition of eligible export transactions in the EFIC Act. This amendment will also support the government's deregulation agenda and benefit exporters by reducing the time and paperwork required to access EFIC support. The new direct lending arrangements will remove the need for exporters of non-capital goods to obtain a guarantee from EFIC before they can secure funds from a bank, which doubles the due diligence processing time and requires 2 sets of documentation and legal fees. This has a real impact on business.
The debate is interrupted in accordance with Standing Order 43. In the minutes, we'll have leave to continue his remarks when the debate is resumed at a later hour. I call the clerk.
Next order of the day, Export Finance and Insurance Corporation Amendment, Direct Lending and Other Measures Bill 2014, motion for the second reading.
And I call the Minister for Small Business, and I understand it's in continuation.
Yes, it is, Deputy Speaker. There was a gripping presentation of this legislative proposal pre-question time, and if I could continue in its introduction, I'd be most grateful.
Order.
Well,
the Minister has the call, and the Minister will proceed.
I'm being encouraged to go over it all again because it is great for your electorate. It's great for our nation. It's great for SMEs that are either current exporters or prospective exporters, growing export markets, creating jobs and opportunity for our country. That's what this bill is about. And it's also deregulatory. So we can do a better, more effective job and achieve deregulation outcomes, and that's what this is about. I was explaining how the amendment to remove the word capital from the definition of eligible export transactions will see capital goods replaced simply with the term goods. That's 95% of the goods exported from Australia is currently exempt or outside the reach of the direct support that EFIC's able to provide. And this amendment deals with that. It deals with that by seeking to remove the word capital, and as a result of that amendment, it will be deregulatory in that it will reduce the time exporters face in paperwork and also multiple efforts to get initially a guarantee from EFIC and then to go on to secure the funding facility from a bank. That doubles the due diligence processing time and requires two sets of documentation and legal fees. And that's how this measure is not only good for enhancing the effectiveness of EFIC, but is also a deregulatory measure. And that is a real impact on SMEs for Australia, a real benefit for those small and medium enterprises looking to secure export opportunities. And may I provide an example? Consider the case of the South Australian family-owned paint manufacturer Aztec Paints. In recent years, Aztec Paints has experienced increasing demand in Japan for its innovative paint products. The company's elastometric paints, which are designed and manufactured in Adelaide, meet Japan's strict earthquake-resistant building codes, giving them a competitive edge in the market. Thanks to the elimination of all tariffs on paint products under the Japan-Australia Economic Partnership Agreement, the company anticipates that strong demand and strong growth will be there for its products in the Japanese market, and this will continue. To meet this demand, Aztec required additional working capital to scale up its productions to be able to secure that delicious opportunity that it had identified. Although Aztec's bank was supportive of their growth plans, it was unable to assist without additional security. EFIC stepped in to provide a $600,000 export working capital guarantee to Aztec's bank. This allowed the bank to provide the funds Aztec required. However, under the current arrangements, Aztec had to make two separate applications, one to EFIC and another to their bank. And as a result, they had to pay two sets of lender fees and charges. Another EFIC client, PCT Global, manufactures Enduro Shield, an easy clean surface treatment. This product was recently used to coat the spire of the new World Trade Center building in New York. PCT also produces home do-it-yourself kits, DIY kits, which it distributes domestically through Bunnings Warehouse. The DIY product was recently featured as one of Time magazine's top 10 most compelling products. Building on this success, PCT secured a multi-million-dollar supply agreement with Home Depot in the United States, the world's largest home improvement retailer. PCT needed additional working capital to expand production, but their bank was unable to provide further assistance. In response, EFIC worked with PCT's bank to provide a $650,000 working capital guarantee facility, and this enabled PCT to meet the increased demand for this business-changing contract. However, without the benefits of the proposed regulatory measures, PCT faced additional fees, interest charges and administrative costs to secure the guarantee facility and to secure the export opportunities and the growth and jobs dividend for our economy. These are just a couple of examples of how these changes will assist Australian SMEs and why this is such an important amendment to EFIC's direct lending arrangements. However, to ensure that these changes do not bring EFIC into direct competition with private sector financiers, the government has decided to apply competitive neutrality principles. This also implements the recommendation on competitive neutrality in the 2012 Productivity Commission report on Australia's export credit arrangements. To achieve this, this bill provides for EFIC to pay a debt neutrality charge and a tax equivalent payment. This will allow EFIC to help commercially viable exporters overcome financial barriers without discouraging or displacing private sector participation in the market. In conclusion, Mr Deputy Speaker, the amendments in this bill will be of particular benefit to small and medium-sized businesses, the engine room of our economy, while at the same time aligning with and contributing to the government's commitment to reduce business compliance costs by $1 billion per annum, and I commend the bill to the House.
Order. The debate must now be adjourned. The question is, that the resumption of the debate be made in order that over the next sitting all those of that... did you? Oh, sorry.
Thank you, Mr
The
Speaker.
member
I move the debate be adjourned.
Yeah. I put the question ahead of that, I'm sorry. The question, therefore, is that the resumption of the debate be made in order that over the next sitting all those of that opinion say aye. Contrary, no, I think the ayes have it.